Welcome back. We are still with Robert this morning, really looking at those results, the 6 months results of 2021 for HF, and we've seen that their loss trend is continued into 2021. So Robert, just before we went for that short break, I asked you indeed if in any case we can trace HF's change of strategy from building and selling from building and selling buildings to just marketing and letting out mortgages in the economy. Is there any way that we can tell the impact of that change of strategy in this result?
Well, unfortunately, right now we can't really trace it unless you wait for their full, maybe their annual reports, so that we can really track maybe how many they've managed to sell, to convert.
Yes.
What of course they still have, because remember, Simba, that their ending of construction, it was dependent on them finishing they already had.
Yes.
So so they still had to finish the project that they had, then now at them. From their assets into profits, and remember, it was still problematic because they still had to issue a 30% discount some time back. So just to convert these houses into cash, so it's really that bit of an E or HF, but we can say that judging by their figures, it's still to the point where they wanted it to be.
The biggest announcement that we got from Britam this is that they were planning to sell 42.8% of their stake in HF to a bigger bank in the economy, Robert. They didn't say which bank, but were sort of speculating there had to be a tier 1 bank that wanted to diversify its portfolio into the real estate sector. Do you think that this is the only way out for HF now? Indeed, if the results look like this, they change their strategy. We're still waiting to see whether this is going to really have any impact on their balance sheet. But then there's that big bank waiting to come in and invest in HF, especially on that Britam stake. Do you think that that is the only way out for HF?
Well, it's not the only way out, but it's definitely a way out.
Yes.
Britam had
Robert, I'm sorry, Robert, I'm sorry to cut you short. Is it not okay for us to call it the only way out for HF? If indeed you look at the loss and profit trend for HF, I mean, there have been a loss making for quite some time now. So if Britam is selling 48.2% stake that they have in HF to a bigger bank, wouldn't that be the only way out for HF, especially going by the latest result?
Well, yes, it's definitely a way out. But Britam, remember, had issue that they were only HF at a profit.
Yes.
Because remember that its share itself has significantly declined that investment. So for them also, it's something that they have to consider, because if they do so, they'll have to. So it's something that is in the pipeline. Remember, so currently they are still a restructuring process, and it's usually a long process, and we are yet to see. But the best option for them right now is for maybe a larger success that can maybe just hold their hand and help them do this process, because it still requires significant efforts to attract also customers and who will at least bring in deposits, because we still see that their deposits are decreasing, which are warning signs. Their loans are decreasing. So so they want to the SME sector, which has been really one for banks, especially in the last. So I think the best option would be for a bigger bank with adequate capital to come in and maybe help them out, because HF still has potential. Of course, to deliver supposed to be delivering, because we're seeing the banking sector as a whole is providing returns. So definitely it's the best option for them right now, because all they are in the process, of course, will incur them costs to capital, which they a big bank coming in is the best option for them, but it also depends on return and what they decide with their shareholding capacity.
Fantastic. All right, Robert, let's move on to the next issue that we have for you this morning, where Bamburi Cement PLC continued with its stellar performance from a 2020 with a net profit of 776 million for the first 6 months, ending June 30th, 2021, compared to 721 million over the same period in 2020. The cement manufacturer saw its turnover increase to 19.6 billion in H1 2021 from 16.2 billion in the first 6 months of 2020, with its operating profit jumping to 1.1 billion from 228 million in the first 6 months of 2020. Now, the company has attributed its performance to a recovered cement market from a depressed 2020 that saw real estate sector hit heavily. Government infrastructure projects under the Big Four agenda that contributed heavily to the company's fortunes last year also accounted heavily in their earnings in the period under review, with government spending on a huge infrastructure projects consuming the more expensive premium cement. The question that we have for you this morning, because I would like to start on exactly where Bamburi Cement closed trading yesterday. Yes, we do have them coming in at position 3 with a 1,296,800 shares traded yesterday, making that top 5 movers list. In fact, knocking off the big boys who've been taking that list for quite some time now. Robert, let's begin from there. Is it because of this news of this profitability jump from Bamburi that we saw the market react yesterday to really record those number of shares that we've seen?
And of course, so Bamburi has actually been quite, it's similar to HF, but in the opposite direction, because
Yes.
you're actually seeing that cement manufacturers in the industry, actually most of them are not performing quite well. But Bamburi has been ahead of the industry, so that's why we are seeing an increase in their profitability. So remember, last year they also had a period when there was it recorded a significant gain, because it had declined low as 20 shillings per share to what it's trading at now from that 8. Of course, you have to consider that it was once as early as the beginning of the year trading upwards of 75 shillings per share. So Bamburi, what happened is that investors had expected it to be significantly hit, similar to real estate, but it managed to record a profit in the previous period. This was, of course, mostly due to the tax credit that it received from the taxman. But now when we look at in terms of their performance, first of all, we have considered the strategy, which was focusing on health, cost, and cash.
Yes.
So on the health initiative, they mostly wanted to ensure, because staff can get healthy, of course, in this environment. Then cutting down on cost, the cost initiative, and now conservation of cash. Now we've seen them cutting down on cost, of course, and we've also seen them increasing cash holdings, which are currently at 6.4 billion Kenya shillings, which is actually the highest since 2017. So that's a good sign for Bamburi. In terms of their performance, you also have their top line revenue increasing by 21%.
Yes.
You also have their operating profit itself increasing by 240.8%, from 1.1 billion to 0.3 billion in the previous period. So the only thing that happened is that we didn't see this performance really reflect in the profit after tax, which of course still increased 7.6% without the tax credit. So when you look at the details for Bamburi, it's really impressive reading. It's really good to see this company doing really well. And of course, investors all this, and they wanted to, invest in something that is moving in the right direction.
So, Robert, I just want us to look at the profitability trend for Bamburi as well. I mean, we have to go all the way back to 2015, yes? And just jump into the profitability trend, even if you can as well, because that's where the conversation point is coming from. Fantastic. All the way from 2017 to 2020. You will see indeed what we're talking about Bamburi is that in 2018 they made 572 million in terms of profits. 2019 359. 2017 that's when they were at 1.9 B, and then in 2020 they closed at 1.1 billion. It looked as if with the way things are going, Robert, they might even cross that 1.1 that they made and even turn in more. So when you look at that specific profitability trend, would you say that indeed this is a company that is sort of found its mojo within the Kenyan economy?
Well, Simba, that's actually an interesting trend analysis. When you look at Bamburi, their main production line or business line is production of cement.
Yes.
And the Kenya National Bureau of Statistics, they recently released a report indicating that cement consumption increased by 26.6% from the same period last year. So you can see that such statistics also, they point a picture of the industry as a whole and how it's performing. So construction activities are still going on. And to match this, we had the manufacturing increasing also their capacity by 27.3%. So what we can tell from this is that the real estate sector, construction in itself, is growing, because we have the real estate industry. They just decided that they couldn't rest on their laurels just because the industry is not as well in terms of the construction. So we had the constructors increasing their construction through the period, maybe taking advantage of this period, advantage also of the restructuring arrangements which were offered by banks, of course, as per CBK's directive. So yes, if this continues, this demand, of course, continues to grow, if it just remains consistent. Of course, it's dependent on a lot of things. Remember, next year we have elections.
Yes.
And expect that they will impact the business environment negatively. So, of course, it won't be Bamburi only which will be affected, but it's the risk remains abound. But this government actually has really promoted Bamburi in terms of the construction activities. Remember, they also had the Big Four agenda.
Yes.
And the good thing about Bamburi, they don't rely only on government. They also have retail clients really account for a very high percentage of their sales. So really nice position. It's still innovation. So it's good for them to beyond this class that they have. So this is yes, I think it's possible.
Yes. So Robert, a final question on that as we come to the end of this conversation. If you look at that profitability trend, again, we have to look at it as well. Because if you look, majority of where this performance is coming from is that in the country, the government has been really stressing on that Big Four agenda. And we've been having a lot of infrastructural projects in the country. In fact, and they noted that when they're releasing their results, that have been taking the high premium cement, which has contributed heavily to that top line. All right, let's look at it, Robert, again. I mean, if you look at that profitability trend, in 2018, they were at 572. In 2019, it dropped back to 359. But now, since indeed we've gotten into the bigger projects again, from 2020 upwards, Bamburi Cement, all of a sudden, was giving us these good figures. Now they're giving us at 776 for the first 6 months of this year. If that continues, they might eclipse the 1.1 that they made in entirety over 2020. So if indeed then we are talking about the government Big Four agenda being the biggest contributor now to those figures, should we ask a question again? Once these projects are done, are we going again to go back to those Bad numbers that we're getting from Bamburi, the 359.
Well, actually, we still have to remember that Bamburi is also cutting costs.
Yes.
So that will still help it, especially we had financing costs, which was a really percentage of its costs last year. Financing costs, for example, this was mostly due to them cutting down on long-term debt by 29%. So also remember that the Big Four agenda is losing steam a bit. It's not as hot as it was before, because you're seeing now the government is cutting down on development expenditure and also trying more to support people in the midst of this pandemic. So it's still impressive that despite development expenditure, also in the budget, development expenditure received a significant cut. We had also in the budget outstand for July, where development expenditure and also expenditure to the counties allocated 0%.
Yes.
So Bamburi is actually, Bamburi is actually performing well in a very tough environment, because of course, yes, the government is a big client, but they also have, remember, the construction industry as a whole slowly coming back to life. So they also have the retail clients who are providing it at least a good customer base, which they can rely on. So I think the major risk for Bamburi actually is competition, because we have a company like the Nairobi Business Ventures, which actually declared that they are planning to build a cement plant. So the increased competition and maybe big prices will be the main challenge for Bamburi, and not really the Big Four agenda, because the projects actually that the government have and that were launched recently were private and public partnerships. So this is still, of course, expected to be the way forward, at least for the remainder of this administration.
Fantastic.
So it still has, of course, room for improvement, with the main threat being competition.
Fantastic. Robert Kanyori, thank you very much for taking your time to speak to us here at our Metropole Television this morning.
Yeah, thank you, Simba. It was really nice talking to you.
Right, nice talking to you. That's Robert Kanyori. We'll be looking into those results for HF and Bamburi Cement. And it's saying, well, there's room for improvement for Bamburi. And it looks as if the only competition is not the end of Big Four agenda. Indeed, it could be the introduction of new players into that market, like Nairobi Business Ventures, who want to get into cement manufacturing in the country. Quite an interesting conversation that we're having here at Metropole Television, taking back to the time that he came to the studio this morning at Metropole TV KE across your social media platforms, Metropole TV Kenya on YouTube. We appreciate a subscription and a comment once you get there. My name is Elijah Charles Kiage. Good morning.